That's interesting.
So I think then maybe just respecting everyone's time, we'll maybe just go ahead and get going.
Okay.
I'll just introduce myself quickly. I'm Stuart Fullerton. I'm the Manager of Economic Development and Communications here at the town of Innisfail. Pleased to welcome everyone today, as well as Mark from Business Link. Mark is a business strategist with Business Link, with whom we've partnered along with the Innisfail and District Chamber of Commerce to offer a series of business-focused webinars over the course of the next 3 Wednesdays. So in addition to today's webinar, we do have 2 more. We have another one Wednesday, May 26th, which will focus on startup steps, making your idea a reality. And then on June 2nd as well, we have one called Market Research for Success. So certainly hope everyone can join us for those as well. Just a note that we are recording the webinar today. So just for the awareness of those that are participating, just to ensure that we're being transparent with that respect. And we will aim to share these publicly once they're completed, likely through the Town of Innisfail's YouTube and Facebook page and whatnot. Again, just want to acknowledge and thank the Innisfail and District Chamber of Commerce for their support and participation in this event, as well as Business Link. And I think the only other comment I was going to make is there is a Q&A box at the bottom of your screen. Participants should be able to see it there. I think we'll treat it fairly casually today. If anyone has any questions as we go along, feel free to just punch them into the box there. I'll keep an eye on it for Mark and maybe just relay any questions as they come up, or if there's a bit of a lull or a break, maybe we can take on a few. And if there aren't, that's okay as well. We'll let you do your thing, Mark. But otherwise, I will turn it over to you, Mark, if you're able to give a brief introduction and take it away from your end.
Great. Yeah, thanks very much, Stuart. Very happy to be here and partnering up with the Town of Innisfail to share our 5 ways to finance your small business today. So yeah, myself, I'm a business strategist with Business Link. So I'm going to give a bit of an introduction to our organization here in a moment, just so you get a better sense of what we are and what we can do for you as small business owners, current or aspiring. Myself on our strategist team, I will find myself dividing my time between doing things like this, sharing these types of presentations and making connections into with other community partners, as well as meeting one-on-one with clients and helping them strategize their business and approach. So yeah, that's a little bit about me. And then I also bring a bit of an accounting angle, I suppose. I've done some accounting training and kind of chipping away towards the CPA designation, though I'm not one currently. But within our team, I'm kind of seen as that the number cruncher, so to speak. So bring a bit of an angle of that to my presentations and such. So we want to today achieve a few things for you, we hope. So first of all, we want to give you a better understanding of what distinguishes the different types of funding and financing that are going to be available to your business. So we'll talk about the nature of these and what sets them apart from each other, what maybe some could be seen as advantages and potentially disadvantages to each. So that's one of our first goals here, is to gain that understanding, or provide you with that understanding. And then we want to make sure that you're able to identify at least a common source or common sources of each within the province here. And then finally, we're going to wrap it up with explaining a bit about how, well, we really want to emphasize the need for a plan towards how you're going to finance your business. So we'll elaborate on that, as I said, towards the end of our presentation today. But I think that's really where we bring it all together. We're going to collect this information, but it's creating a plan that's going to really help us to put it in action and make our financing decisions actually help us move our business forward. So yeah, if you are interested in perhaps indulging this, I believe you can all use the Q&A for just to share this so that we might see. But yeah, just tell us a bit about what your business is or what your business idea is. Yeah, just a way to create a bit of community in the room, perhaps, and may be able to draw on some example. So yeah, and feel free to kind of do that throughout too as you have questions. And I'll just quickly reiterate what Stuart had said. please do ask any questions that come up. There are no bad questions. We find it's very helpful to create a conversational aspect to our presentations. So please don't hesitate at all if any questions arise throughout the presentation, as well as you'll be able to reach out to me following today's presentation if you did want to ask questions that way as well. So a bit about BusinessLink. We're a nonprofit organization. We receive funding from the government of Alberta and the government of Canada in order to help small businesses grow in Alberta. Small and even say medium-sized businesses. We're here with a mandate to strengthen the economy by providing these services. So we help businesses at all stages. A good chunk of them are in the idea to starting stage, but a substantial portion as well are already running a business and looking to grow that business. We've been doing this since 1996, and we provide this support in this effort to make our economy stronger as a whole. So most of our services, which we're going to outline here, are at little to no cost to you as the entrepreneur. So one of those areas where we really bring a lot of focus, and I mentioned this briefly at the start, are one-on-one advice and information sessions with Alberta business owners. So our strategy team will meet with clients one-on-one. This can be a singular time if all you need is some piece of information. It can also be ongoing and act over the long term with perhaps bi-weekly check-ins, that kind of thing. It all depends on what the value, whether there's going to be value for you, you're recognizing value, and we as a strategist team are seeing progress. We'll be continuing to meet with you, and these meetings are at no cost. Us as a strategist team, again, we try to be really on top of and competent about all the different resources and other service providers that are going to help businesses throughout the province, and we can make connections. So if we don't have the direct knowledge or direct tools to be able to support you, we want to be able to make sure we can connect you with someone who does. We also have a few support services. Our secondary market research assistance is a very popular program, receives many hundreds of queries in a year, where we have a research team that has access to a number of professional paid databases, and we can draw reports from those databases on your behalf. Again, at this particular point in time, that is also a free service. We have our expert program, and I'll make a little addendum to this. It's currently undergoing a bit of a revamp. So where we once took appointments and paired people up with volunteer professionals, we're looking at how we might change that around. So stay tuned, so to speak, for that particular program. If you're still in that planning stage, you can utilize something like our interactive business plan builder, and we've got a bunch of guidebooks and recordings of webinars and such. So yeah, that's some of the support services we provide. And then finally, and briefly here, our educational services, which we're engaged in as we speak, presenting webinars and information sessions, networking opportunities to Alberta businesses broadly. Very brief mention here, we have some particular programs within our organization. So we have specific services provided for Indigenous business owners, as well as immigrant business owners. So if you identify with either of those groups and would appreciate connecting into either of those programs, absolutely let me know, and we'll do that, or visit our website, and we'll make sure that that connection happens. So just to give a bit of a sense of how the scope of the work that we do, as I said there as well, about 49%, so just under half of the inquiries we get are from people who are starting their business. And that's out of about 12,000 interactions we sort of say we had over the year. So over 12,000, just under 12,000 times we were able to provide some kind of assistance to Alberta business owners. Not all necessarily unique, but that's the volume of interactions that we're having. And then, as I mentioned there as well, about 850 market research requests. So yeah, pretty wide scope. We deal, again, with all business owners. So whatever you're engaged in, there's likely some way that we can help you out. So that's a bit about Business Link ourselves. And yeah, so if you did have any questions that pop up about that, about us as an organization, throw them in the question box there. And yeah, in the absence of that, we can begin our discussion about financing your small business. So right away, one of the things we recognize that we do with this presentation is an element of myth busting, so to speak. We get lots of calls and queries from Albertans about where they can find grants and funding to start their businesses. And so if that includes you in the group, that's a very common thing for people to come to us with an understanding of. But grants are something that is actually very low on this chart of places that people report receiving funds to start their business. So by large amount, far and away, the most common source of money used to invest in a small business is personal savings, money that people have saved up or perhaps received from a personal connection in their lives. So that's far and away number one. Almost 84% of businesses had to contribute something of their own money. Probably doesn't come as much of a surprise. As we're going to see here today, rare would be the case that someone wants to give you all the money it takes, excuse me, for you to start your business. So yeah, that's going to be an important element here. Banks and other financial institutions come in at the next highest. And it can be more viable than sometimes people realize. So that's where we're going to jump first today, is talking a bit about debt financing and how it works and how it might apply in your case. And then the rest are kind of all a bit of a grab bag. We do see government loans and grant programs, like direct government loans and grant injections into businesses. Pretty small amount, less than 5% of businesses report receiving any kind of grant to start a business. So again, we're going to talk about all of these in more detail, but just to give you a bit of a picture of how this breakdown typically looks for most businesses as they're getting started. So what are the types of funding that we're going to really dive into today? Debt is a really common one, as we just saw there, and that's where we're going to start our discussion. So this is money received that's going to be returned. Equity, so selling a portion of ownership of your business, being another common way to raise funds to start. And to grow. So I should just quickly make a side note. I sometimes have a bit of a default to talk about this from a startup perspective, but all of the same applies if you are looking to expand an operating business and to grow your currently existing business. We'll discuss a bit of nuance around that, but yeah, all of these will apply in either case here. So grants, again, we get lots of questions, so there'll be lots of clarifying around what grants might exist and how they can be put to use. We also want to talk a bit about crowdfunding. It's become a bit of it's becoming more common way for business owners to explore potential financial support for their early stages. And some uses beyond that as well that I think make it really intriguing. And then we'll wrap that up. Our fifth category of our title is going to be a group of alternate sources that bear mentioning but aren't terribly common in getting your business started. It's probably going to be one of these really four, and then those alternate sources kind of come into play a bit more as your operations take hold. All right, so debt financing. Well, what are we talking about when we say we're going to use debt? So we'll put a definition on the table here so that we're all operating with the same understanding of the term. So here we're going to say debt financing is money that's given by a lender and going to be repaid by the borrower on some negotiated schedule, typically, and that includes the rate of interest. So you're going to be paying back more than you received in the first place. And when it's scheduled, it's commonly going to be paid on a monthly basis. Though again, that's not a hard and fast rule. It can look a little different. So, and actually, just before jumping straight into this slide, interest is something that, again, it comes up a lot in our conversations with clients. That's sort of seeking the lowest possible interest rate, which is natural and understandable for sure. But it's what can be helpful, I think, when you start to look around at debt financing, is interest being a recognition of a few things. First of all, it's going to be a recognition of risk that's being taken. So the higher that interest rate, the riskier the proposition, typically, at least from the lender's perception. So that's important to consider, that, if you're looking to lower that interest rate, it's probably a matter of lowering the risk rather than looking around for other alternate options. Another important consideration there is, and I don't want to get too esoteric or technical, but this concept of time value of money, that money today is worth more now than it will be in the future. So yeah, if that's sort of something you want to dig a little deeper into, or say, what the heck does that mean? I'd be happy to kind of probably take more of a conversation like that offline. But that's another factor here. If you're going to be paying this loan back over, let's say 10 years, those loan payments, those scheduled loan payments, are worth less to the bank in the future for inflation purposes and many other things. So that's where the interest rate is really coming from. Now let's talk about where we go and find this. So, of course, no surprise, commercial banks and credit unions, of course, are going to be the primary sources of debt financing into the economy. Their lending comes in various forms, though. So this can be in what probably most people think of when they think of a small business loan, a term loan. It's going to be structured in its payments, meaning it's a set amount that you pay in every pay period. It's going to be paid on this regular schedule, first of the month, middle of the month, that kind of thing. Typically, that is going to see a bit lower interest than other products, such as credit cards, lines of credit. So credit cards give you this really strong flexibility around when it gets paid. But of course, and I'm sure we're all pretty familiar with this from consumer credit cards, much, much higher interest for that privilege. It's much riskier to bank. Lines of credits lie somewhere in between. So yeah, all of these, though, can play a role in helping you get started. Short-term money lenders that sort of exist outside of our typical banking options. We'll mention those in a moment here as a potential option in very specific scenarios. Banks, of course, are very risk averse. And that's one of the most important things you want to be keeping in mind when you start to explore banks and debt borrowing to start your business. How can we mitigate the risk that's going to be involved for the bank, but coincidentally, essentially for yourself as well? Sometimes I think we as entrepreneurs can underestimate a bit the risk of the enterprise that we're looking to get into. Banks can kind of help be a bit of a check on that. So it's not all bad necessarily that they have that aversion to risk. It's a way to protect themselves and then by extension yourself as well. But this is some of the ways that banks are going to look to you to reduce that risk. They're going to require some collateral. Something that they can take back from you, essentially, an asset of some kind in the event that you can't pay that loan. They will look for some kind of personal investments. Again, a bank, if you go and ask the bank for all of the money that's going to be necessary to start the business, they'll see that as them taking on all of the risk. If you're only asking them for half of it and you're putting in the other half, you're showing that bank that you've got confidence. You're willing to put at risk your own personal savings, that's the level of confidence you have in this idea. That's going to extend to the bank as well. So with this in mind, of course, they're going to prefer to finance hard goods. It's going to be very difficult to find loans based on, or to pay for things like payroll or marketing expenses, or things that are used within an immediate period. And yeah, we're just, we already talked about this a bit on the last slide, but don't be discouraged from or quickly look over some other forms of lending products that might go outside of that typical small business loan. Starting small can be really helpful, and you're going to probably hear me say that a lot of times today. Think about how you can break up your business startup or your business expansion or your product introduction, whatever the case is, into stages, small stages, and then finance stage by stage. From a lending perspective, that's going to be really helpful because obviously the lower the dollar amount you're asking to borrow, the less risk is going to be involved. If that number gets high, it becomes less and less viable that it's going to be obtained. So we can use these sort of general rules that banks are going to examine when they're looking at loan applications. We call them the 5 C's of credit, or the 5 C's of bank lending. So your credit score. Sometimes there's this perception that if you create an incorporated company, that it's that company that's going to be applying for the loan. And that's a bit of a myth. In essence, if it's a brand new company, the bank is going to still want to examine your personal financial situations. Your own credit history is going to play a role in that decision. And that can make sense if we think about that company as it is, which is a separate and distinct legal entity of itself. When it's created, it has zero credit history. It's got no history of spending money, of earning money, anything like that. So just like a young teenager isn't going to be given a loan from a bank for that same reason, your company won't be when it's brand new. As the company builds its own credit history, it will start to get its own score and then can borrow on it of its own volition. But at the start, yours is going to be, your personal credit is going to be examined there. So, capital, again, we've mentioned this already. How much of your own wealth are you going to contribute into this endeavor? Can you break that up into percentages and show them how much you've got to put on the line here? That collateral, again, I mentioned this briefly earlier. What's something of value that you have that you can offer this bank if the terms of the loan aren't being met on your end? That's going to help reduce that risk. Capacity is important. Do you have the ability to earn, to pay the payments every month? So this is why a bank is going to want to examine very closely your cash flow projections and going to want to see some realism in them, because they're going to know how much they're going to want to charge you month by month for the loan payment. So are you showing that every month you're earning enough, enough positive cash flow to be able to pay that bill when it comes due? So that's, sometimes gets a little overlooked, but it is really important. And then finally, while this isn't maybe rising to the level of importance of the others, it can be the sort of proverbial deal breaker. Mixing up my words there. If everything else is, they're on the fence somewhat, and don't quite have something to push it one way or the other towards yes, we'll lend or no, we won't, then it might come down to the character that you're showing. So for lack of a better term, it's like your resume. Are you a responsible person, or have you been up to this point in time? So those are the 5 things you want to really have top of mind, and think about how you can address each of them when you go looking for a bank loan. Now, we'll just learn a last little bit about loans. So I'll go through this relatively quickly. When you are starting your new business, so you've got less than 2 years of that financial history that we discussed a moment ago. A bank is going to, this is a bit general. So, some banks might have much more than this potentially, but we're reasonably confident all banks will expect some form of these points here. So you're going to need a business plan, and it's going to need to be a strong one. They're going to absolutely want some kind of financial projection. Your personal income is going to be a factor here. Again, your credit score. And then another important thing is to think about the industry that you're going to be operating in. Some banks will decide that they are just not going to be involved in an industry, period. They find that industry too risky. As an example, I've got a friend who's a banker, and he once told me that they don't do any loans for liquor stores. They just, the liquidity of the inventory of a liquor store, and the lack of assets, hard assets, and fixed assets involved makes it too risky for them. So no matter all those other things we talked about, liquor stores, they're out. So if you're, you may want to check with any institution that you're going to be exploring and just determine right off the get-go, if the industry that you're going to be operating in is one that they will work with or not. If you've got 2 years of operating history or more, the situation changes a little bit. In some ways, as long as this financial history is strong, your lending case gets stronger, of course. So they're still going to want to see, though, a business plan, financial projections, the business's credit score now, things like a notice of assessment from CRA for the corporation or for your personal, if you've been doing as a sole proprietor, financial statements, perhaps audited financial statements or compiled by accountant, and so on. So you just want to they're going to try to get more into the details of the financial picture of the company at that point in time. All right, so a few places that we might find that you may turn for government lending. So BDC is a Crown corporation, the Business Development Bank of Canada, and it's fund small businesses. Now, they really, from our experience, don't get involved with brand new businesses. They'll fund business expansion. So they're going to be looking for 2 years of operating history, really, before looking too much into their loan products. ATB is a bank owned by the provincial government, but it still does operate largely like a retail bank. So, you would want to approach ATB along with your current bank and any other bank in your area. Shop around. But one thing we do like to highlight with ATB is that they have these entrepreneur centers. Calgary might be a bit of a hike to come just for this particular purpose, but they also are providing things like webinars. I believe you can meet with their strategist online currently, and maybe that'll be something going forward as well. Checking out the Calgary and Edmonton centers might be, websites at least might be worth your time. And then, of course, there's some government-funded loan programs. So here, these are independent organizations, somewhat like BusinessLink, that are receiving money from the government to lend out to businesses. Again, just to make it clear, we at BusinessLink do not do any lending. We are information only, but these organizations do. So Community Futures, again, some of you may be familiar. Community Futures I should have confirm this for sure. You can correct me if I'm wrong, Stuart, but I believe it to be Central Alberta office of Community Futures covering you guys. They are a lender that will offer loans if you're being turned down by a bank, for example. So if you don't quite meet that risk profile from a commercial bank, reach out to Community Futures. They may be able to work with you. Not in every case, though. But, they've got a bit more generous or risk willingness to take on some risk. Alberta Women Entrepreneurs, similarly, they've got a pool of funds and they'll lend to women. Momentum is an organization in Calgary here that lends based on income level, being low income as a poverty reduction effort. I should have mentioned Community Futures is rural focused, so Calgary and Edmonton residents do not have access to that program. Futurepreneur being one that's for people under the age of 40. So you'll see kind of a trend here. they're often trying to target particular groups, particular parts of the population. So it's often for any kind of government-funded loan program, you're going to need to meet some kind of criteria. So those are some of the main examples that you'll find in Alberta here. And then final point there, they typically come with some additional supports that you might not find again at a commercial bank. So when you enter the AWE Women Entrepreneur Program, if you get a loan from them, you'll be working with an advisor along the way. Futurepreneur, similarly, you're going to get paired with a mentor in that program that you can touch base with. So they make a bit more of an investment in that aspect of your business as well, which it can be important and valuable. So our final mention here in debt is our short-term money lenders. And we bring this up really to say how limited the use of these kinds of lenders should be. The interest rates are going to be quite high, and the terms will be quite strict and steep. So they're meant to be used in particular situations. So one example that can be easy to grasp is meeting payroll. Let's say that your company is, in general, financially healthy, it's got good cash flow, but you've just made a big investment. Maybe you've opened a second location and drawn down your cash quite a bit to invest in a new lease or new equipment or something like that. You know, you had to bring your cash down really low, and your payroll is coming up and you don't quite have enough to meet your payroll obligations that week. That might be a great time to turn to a short-term lender. You can get the amount you need to pay your payroll, but you're confident that the next pay period or the next period coming up, you're going to have that cash to pay that loan back. If you're looking at these lenders as sort of an alternative to a bank because that risk profile is too high and there's no guarantee of paying the terms of the loan back in a very short period of time, then this can pile up quickly. So yeah, we mentioned it here because it can be viable and it can be an important service for sure for companies, and certainly not meant to be portrayed as a negative thing, but just knowing that risk around the short-term lending as a solution to risk mitigation. All right, so maybe I'll just take a brief pause and see, did we have any questions that might have arisen from debt? And yeah, if not, yeah, let's just a brief pause and then jump into equity. Right. Great. So yeah, again, just because we've moved on from that subject doesn't mean if you have other questions that come up around debt, please add them in there. That's no problem. But yeah, we'll start to describe what's meant by equity here. So this is a company, a name, sorry, the word that you may be familiar with, maybe a little bit less than debt. We're often quite familiar with debt from our personal borrowings like mortgages, car loans. So we deal with our personal finances quite frequently. Equity, a little bit different. We may know it from that investment side, investing your personal wealth. But when we think about it from the company's perspective, it takes a bit of a different shape, perhaps. So here's our definition of equity. Equity is going to be equity financing, is money given by an investor and is going to be repaid, to that investor by distributing the profits of the company. And that's going to be allocated to them based on how many shares of that company they have. So what percentage of the company they own, that's the percentage of dividends that they're going to receive, is the name that we use for these payments. The shareholders of a company are going to vote on when these dividends are paid and how much that dividend is going to be. So if we start to think about this and contrasting it with debt, when we borrow money from the bank is unconcerned with whether our company is profitable or not profitable. They're going to expect that payment back. Again, I'm speaking kind of in a general way here, but they're going to expect that payment whether it's profitable or not. If it's wildly successful and you're making tons and tons of money, the bank is just going to ask for that exact same amount of money every time. So that's that can be a good thing in some cases, and maybe in others can be a little difficult to manage. With equity, we're tying that repayment to the profitability of the company. So if you bring on an investor instead, let's say borrowed $10,000 in the previous scenario, and this time we're going to instead take $10,000 from an investor. Well, we don't need to pay that $10,000 back on any schedule, but if the company is profitable, that investor is likely going to expect a dividend. And that dividend at the end of the whole life of the company could end up being much, much higher than the $10,000 put in. That's often what an investor is looking for. And yeah, there's control over when those payments go out. So that's the difference here. There's a lot more control and flexibility when you look at equity financing, but there's perhaps a much greater potential to give away a lot bigger slice of the pie. So yeah, and a way to, of course, look at this is you're selling some ownership of your business, which in essence is a share of the profits. And can be considered a share of the assets. Again, I don't want to go too far down a rabbit hole. We're thinking about, of course, starting and growing fully operational companies. It's that share of the profit that they're really investing in. Important to note that to pursue this form of financing from an outside investor, your company is going to need to be incorporated. If you're currently operating a sole proprietorship and that's what you intend to do, equity financing is really not something available to you. We will discuss here how your investment of your own money is essentially an equity investment, but doesn't apply to someone outside of yourself. So if you are looking for other people to make an investment of equity into your company, then you are going to need to be incorporated. Now, adding on that, if we're thinking about, I'd like to go and find a third-party investor who's essentially a stranger to me, just that person who's looking for business opportunities and looking to invest, that's not easy. It can be found, absolutely, but we see it a lot in particular industries. So, we see it a lot in technology and innovation. If you're working on your business is going to have some kind of intellectual property or has great scalability, meaning that it can grow its revenue very, very fast and spread far and wide really quickly, then you can find that type of equity investment. But in more what we might call conventional businesses, opening a restaurant, opening a dog grooming business, opening retail shoe store, for example, specialty shoes, these kinds of things, it's going to be unlikely to find that sort of angel, dragon's den type of investor. And then the third thing to consider there is that your friends and family, very much good to think of them as potential investors in your business. So it doesn't need to be someone who's a third party, that's for sure. It can very much be someone you're already connected with. So we at BusinessLink really like to think about, or like to portray your investment in your business as an equity investment. The reason we think that this is important is because it can help you take a more objective analysis of the risk of your business. So, what do you need to do to convince yourself to make an investment for your personal wealth? Like, let's say you may buy some mutual funds or something like that if you've got those kinds of investments. Why did you decide to do that? What convinced you that that was going to be a valuable investment? You have a somewhat similar process when it comes to your own business. And the other thing is that we can think about why putting your own money in it can be of a lot of benefit. So again, like I said, here we are talking about sole proprietorships and partnerships as well, just for this particular aspect. Well, for one thing, there's no restrictions on the way that this money is spent. You're not going to have any schedule to pay yourself back. You know, you can create that for yourself, but it's not required. It's optional. So that's going to be really valuable. And you won't have that third-party investor who might be able to either vote for themselves to get a share if they own the majority of your shares, or just kind of put pressure on you to pay out that dividend. The more of your own equity that's in there, the more control you have over that. This can be leveraged to receive other financing. So again, we talked about that earlier. Banks are going to want to see some investment. Same with investors. You know, very rare would be the case where someone wants to put up all of the money for you to go and start your business. So that's an important element here. You can leverage it to gain other people's confidence. And you don't need to convince anyone else but yourself. It is important to convince yourself. Again, we don't want to dive into business blindly, of course. But yeah, sometimes it can be quite frustrating to try to convince banks that you're lendable and be turned down. So if you're able to save and invest your own money in your business, there's none of that trying to convince someone else to see what you're seeing. When you're doing this and investing your own funds, it's important to start small. We sometimes say explore the concept of a minimum viable product. So we won't go into that right now, but certainly if you want to Google MVP, minimum viable product, it's a term that comes from the technology world, but I think is very applicable in all business cases. So that's something that could be explored. And again, you can reach out to me afterwards if you'd like to explore that a little deeper. I always like discussing how that might look with clients. Your early sales also from starting small can be reinvested to attract more of that financing interest. That bank and that investor are both going to be much more interested if you can show that you have already convinced someone to buy what you're selling. That's one of the things that I think they see as most risky. If there's no history or no evidence that's ever actually taken place, it's very hard to prove that it's going to work out the way you envision it. Whereas if you've got those sales, that's proof. You've proven that you can sell, if not the current thing you're selling, then hopefully whatever your next sort of proposition might be. But really important to get those early sales. Again, it's kind of stating the obvious, but saving some of your funds on a regular basis to invest in a business is a really good strategy. So the same way you might save up to make a big purchase like a house down payment, like a car, like a vacation, treat your business aspirations the same way. And sometimes we'll get people maybe thinking, on that front that, well, with business, it's different. Someone else is going to enter the market with my idea. I need to start it now. And we just found through experience that rarely bears out. It's unlikely that your business is going to be unsuccessful at some future point and also successful right now. Again, there can be exceptions to that rule, but generally we overinflate that perception in our minds pretty quickly and strongly. So don't worry too much about that part of it. There'll always be room for the majority of businesses in the market to launch. So again, when we do start to look at third-party investors, you can use a couple of terms here. So angel investors is one that gets used. Angel investor being kind of an individual, a wealthy individual who looks for these kinds of opportunities. Venture capitalists, it's a similar concept, but here we're talking usually more about a firm where money has been pooled to make investments in new companies. So yeah, similar, but with some nuance. They're going to be very specific around industry. Again, what we might consider more conventional or common types of business startups really doesn't apply too much. So I'm not going to dwell a lot on this topic. However, if you are someone who's got that technological innovation or something within that realm, software, applications, this kind of thing, please, by all means, we can have more of a conversation afterwards about how this world might work and where you might enter. So lastly, we'll say don't overlook your friends and family. Now, this is with a bit of a caveat again. You want to do this very consciously. We certainly can see family and social ties strained quite heavily by being invested in business together, if especially if things aren't going as expected. So things like a shareholder agreement, contractual arrangements that make very clear what's going to happen with particular scenarios is important to have. But that being said, looking to your friends and family to support you in the financial creation of your business and expansion of your business, a great source to explore. And then again, just from that innovation and technology perspective, we give you a couple links, and I believe Stuart will be sharing the slides up with you where you can follow these links. So Start Alberta is like a database of investors as well as companies looking for investment. All right, grant financing. So yeah, I'm just going to be watching the time here a bit. So we'll talk a bit about grant financing, and then we're going to go into those last kind of alternate ways, last couple alternate financing avenues, and then of course, if hopefully there'll be a bit of time for questions. But as we've said a few times here, feel free to add those questions, and we can address them ongoing. So grants, I think one of the most important things to state and make clear here is that grants are not free money. It might get that feeling. I think a lot of people sometimes think, well, if I can't get a loan or I don't want to pay the interest on a loan, I want to get a grant. Well, while it is true that grants typically, the nature of them means that they do not need to be repaid. So it's money that comes in and does not need to go back to that source it came from. It is going to require, some kind of report that verifies an agreed to outcome. So what do we mean by this? Well, grants are typically going to be given to achieve something. They want your company to achieve something. And this is why they always will have very specific criteria that the recipients are going to need to meet and going to be held to. These can be quite restrictive. So they're often, and really we're just going to talk about government here. Grant opportunities that come outside of government from foundations and such are for business are very few and far between. So we don't really go into that here. So we're really going to be talking about government specifically. And when the government creates a grant, it's to achieve some sort of outcome, sometimes a political outcome. A great example of that is jobs. So governments always like to show that jobs are increasing. So we see very commonly, and this is broad here, with governments at all points in time, we'll see things like wage subsidies. So the COVID-19 emergency wage subsidy, for example of that. We wanted to maintain employment, so here's a wage subsidy to specifically pay your payroll. So that's a key part of it. Grants are going to pay specific costs or cover specific activities. So, while on the surface it might seem like, well, that's great. They're going to give me money and I don't have to pay it back, and wonderful. Well, it's the restrictions of it can sometimes make that distracting from your business or not applicable in the place that you need the funds to go. So when we put these all together, well, with debt, what is the other party getting when they loan your business money? They get interest. They get that interest payment back. That's what they want. That's what they receive. When it's equity, they get the dividend. That's their motivation for doing this. When it's a grant, it's not nothing. It's some kind of measurable outcome that they're looking for. So here are some areas where we'll sometimes see grants, and I will admit this list, I was taking a look at it yesterday, and I think this might need a little updating, but most of it is still going to be relevant. So for export, for example, Export Development Canada, if you've got a product that you want or a service that you want to sell into another market, they might be able to provide some financial and other assistance in helping you to do that. For innovation, again, we talked about that on the equity side. Similar with grants, we can find grants for research and development of new technologies is an area that you might find there. Arts as well. This isn't necessarily all just arts nonprofits, but for example, a musician that might want to record a record that they're going to sell essentially as a sole proprietor, they might find a factor grant to help them do that. Agriculture, there's certainly some areas where grants can be applied. Environment, they kind of come and go. A Clean Growth Hub, I cannot recall if that's carrying on. We have seen in the past things like a grant to upgrade inefficient equipment for a carbon emission reduction purpose, for example. So on top of those areas, economic areas where we see grants popping up, they're also going to be specified on the way that they're delivered. So when the government might list grant programs, again, in our minds, we might think of cash, essentially. They're not always like that. They're going to come in other forms. Some of those forms might be loan guarantees. So there is the Canada Small Business Financing Program is a way for a bank to offload half of the loan risk to the government. So the government will pay back half of your loan, and the bank will only be responsible or only take the risk on the other half. That's a form of grant in the government's eyes. Wage subsidies, again, we talked about that previously. Tax credits, again, you don't necessarily think of a tax credit as a grant, but it kind of falls into this realm. And that's only going to apply to operating profitable companies. Capital investments, potentially, it's a little more rare, but does happen. So they might just specify certain expenses, like you can only spend this on advertising, for example. We want to make sure that you're thinking it's going to be narrowed by the area and then narrowed by the nature of the expense or the type, the way that it's delivered, essentially. And again, when you get the slide deck here, we've got links to web pages that both the federal and provincial government keep where you can find a pretty comprehensive list of the various funding programs that are going on at any given time. So again, I'll kind of ask just briefly here, is your business doing something innovative? And by that, we often mean with an intellectual property aspect. If so, grants may be a bit more readily available in that area for early stage companies. So if that's the case, please do reach out to me. If this is a route you're going to take, then here's some tips to keep in mind. You have to really carefully read the application process and pay really close attention to anything that's describing the outcomes or what the grantor is hoping to achieve by providing this money. It's super important to understand that. You want to ensure your company is a natural fit. So we often see business owners kind of trying to massage the way their company looks, or maybe even the way their company operates to fit the needs of a grant. And that's often not going to be a great long-term strategy. You want to set your operational plan first and then find the funding that's going to help you achieve that. All right. Any questions around grants, debt, equity so far, before we go straight into crowdfunding? All right. Very good. So crowdfunding, again, some of this is becoming more and more common and you may be familiar with, but we'll give it that definition again. So here with crowdfunding, we're talking about a way for large numbers of people to donate, and the word donate here isn't the perfect fit. We'll see in a moment what we mean, but they contribute a small amount of money for a business or sometimes a project. So we do see this in realms outside of strict business. So we can see it with nonprofits. I'm sure many of us have seen GoFundMe campaigns for charitable purposes. So the model applies in many different contexts. We're of course going to talk about business options here. So what's going to be often required within a crowdfunding campaign? a strategy around how you're going to promote it. So social media has largely given rise to this option. So is your social media presence in a strong position? Is it something you've got a plan around? Do you have augmented promotional strategies as well? You're going to need to spread the word about this campaign going on. Most of the platforms that we're familiar with and that I'll mention here are going to require that you create a video that's going to pitch to people why they should support your business and its efforts. So we say that because sometimes video production is going to be an upfront investment you might need to make to make a crowdfunding campaign viable. And most of the time, it's going to be required that you offer some kind of reward. And this is where I mean that word donation may not be a perfect fit, because by and large, those contributors are going to be receiving, you're making a commitment to provide them with something in return. It could be your a unit of your product, if that's what you're making. It could be a service. It could be something different. So, for example, maybe if you make your goods, you do a lesson on how cooking lesson if you're a restaurant, for example, or something that may be a little bit more unique. So, if you browse some crowdfunding platforms, you'll probably see some really unique and creative ways that you can reward those contributors. So here's probably our most pure example of money that does not need to be repaid. That being said, of course, it is tied to a reward. When you achieve your goal in a crowdfunding platform, that money is likely very much going to come to you unencumbered. You get to spend it the way you want, provided you are, again, able to make those contributions back to the people who shared with you. A really good way or thing to consider, an important consideration around crowdfunding is how it can tie into your market research. So this is crucial. I think you not only do you have the potential to earn a chunk of what you need to get your business rolling, but you're also going to likely collect a lot of really great information and feedback on what it is you're selling. So you can test how your message is going to connect with your target market, because it's very likely it's your target market that's going to be making these contributions in the first place. So it's almost like pre-sales in that sense, which it can be a really great way to approach this. It's also important to set a realistic goal. So again, these platforms are going to operate on I want to achieve this goal. If you don't make the goal, in most cases, you don't receive the cash. So you need to be realistic about this. Again, you're likely not going to be raising hundreds of thousands of dollars. Again, there are exceptions to that rule, but most often we see campaigns in lower figures than that as an additional boost to your financing plan. So two common examples, ATB Booster. So Alberta Treasury Branch does run a crowdfunding campaign, platform, I should say, and Alberta focused. And yeah, it's something worth checking out if this is intriguing to you. Kickstarter as well as out of the United States, but operates very similarly. And yeah, just to kind of takes a broader perspective, I suppose, on who could be included. Here's an example of a page from an ATB Booster campaign. So again, we get a bit of a sense here of the rewards that they were offering. So this is a toothpaste company. And so one of those things was a package of toothpaste tablets. Sure enough, that's their product that they sell. But they also did a tree planting. Looks like we'll plant a tree for each $5 donation. So probably just assuming that their target market has got some, that's a shared interest. If you're buying Change toothpaste because it's easier on the environment, you're likely going to be find it appealing that a tree would be planted for your donation as well. So you'll want to think about those rewards and how they're going to tie into your target market. Okay, yeah, making good time here. So yeah, again, any questions that may have arisen out of crowdfunding, being a little newer, perhaps something that might trigger some curiosity. But yeah, if you have any questions around that, please share in the question box. And now we'll talk about a few of these alternate financing sources. So again, just to reiterate, these are typically not where you're going to turn for your business startup funding, but they can certainly be areas to explore if your business is operating, or if and when, I should say, your business gets operating. So for example, trade credits. This is something that in some industries is very natural. Essentially, what we're talking about is credit extended to you by the suppliers of items to your business. So essentially, when you make a purchase, think of like a grocery store, for example, might be making an order for produce. They're going to receive that order and put the items on the shelf, but they're not actually going to pay the supplier until, let's say, 30 days in the future. In the interim, they're going to hopefully sell the product that they've received and then have the cash to pay the bill from the supplier. So it's essentially a loan that you're getting in that sense. They're loaning you the amount that you owe them back to be paid at some future date. This tends to be a little easier once you've built that company history again. So that's why we said it's going to be difficult in a lot of cases for a brand new company to receive this trade credit. But once you are operating, definitely something to explore. Call your suppliers and ask, is this something we can implement? Because the more cash you have on hand, the more working capital you have, the more healthy your business is. You want to delay cash going out as long as possible by general rule in business, and you want to get that cash coming in as fast as possible. The more we can stretch those two apart from each other, the better. Pitch competitions. So again, these have kind of proliferated a lot in the recent past. So the idea here being that you pitch to a crowd or a panel of judges that your business deserves some kind of investment or the prize, essentially. So this is very much a contest, and we wouldn't want to really say that this should be a part of a financing plan, so to speak, because it's hard to rely on this, because you're likely going to be one of a great many that are seeking for that same chunk of money. However, there can be other reasons to do this, and one example is to really hone your value proposition. You can get a good sense or at least get practiced in delivering a pitch about your company, which you're going to use over and over when you're in your sales, when you are looking to banks or investors. So that skill of being able to explain the value of your business succinctly can be really important. So a pitch competition can help you practice that. A couple examples. So 150 Startups is a pitch competition for Alberta post-secondary students. TELUS Pitch, again, I was going to check on whether, I don't know if this is still running, but TELUS had done a pitch competition that was open to Canadian companies. So again, like we've seen in a lot of things here, they're often categorized to an extent. Business Link, we ran a pitch competition in March for Indigenous and immigrant business owners, for example. So if you are looking at pitch competitions, they do require a lot of preparation. They're typically competitive in nature. So you don't want to depend on these funds typically. And we can help you with some resources if this is of interest. And finally here, so talking about factoring, so this is using your receivables as an asset. Purchase order financing, very similar. If that's a commitment purchase, you can use that as an asset as well. Inventory. So those are just some ways that you can use maybe assets that might start to develop as your business operates to access further borrowing. All right, so we're going to wrap up here just with some talk about, how now that you've gathered a lot of information all thrown at you over the last hour here, how do you kind of put it to use in your business or your business plan? So most of the time, a business is not going to need all of its funding to come from one source, or it's not usually feasible for that to be the case. So start thinking about how much you might be able to draw on any and all of these sources to get the capital that you need to start your business. For example, maybe if you estimate your business is going to cost $50,000 to get started in its minimum form, and maybe you're contributing 25% of that. So you have 25,000, or sorry, about $10,000-12,000 that you've got saved up that you're putting in to make up some of those early costs. You're going to ask a bank for another 50 to 55%. And you've got a friend in line who's going to pay for some equity and take a 20% stake to cover that rest. And that's how you could gather up your $50,000 to start, or to fund that expansion, or again, whatever the case may be. So we want to plan this approach, and again, starting small. We want to just continue reiterating that. If you've got that project in mind right now, think about what it might look like at half scale, even at 10% scale. What does it look like to start there and then build up 10% at a time, or add that other 50%, and see if you can access relatively more funds that way. You want to make sure your financing plan helps you prepare for emergencies. So, when you are operating, look for those opportunities to get qualified for lending, get a line of credit set up at a time when your cash flow is good. Because as soon as your cash flow gets tight, and this is what COVID-19 made so painfully clear in a literal way to business owners, very painfully clear was, when cash flow is tight, it's difficult to get people to take that confidence and lend you further money to keep things afloat. So you can look some next steps here. If you're in that startup phase, absolutely finish your business plan. That's going to be crucial in almost all of these steps. Make that plan of your approach. Start to portion out what you think is reasonable from any particular source of funds. Start saving. Again, if this is something that you are really set on, it's likely that opportunity is not so fleeting that you have to do it today. So make a savings plan to start contributing and building up that capital of your own. And yeah, if you do this, rather than saying if you do this right, once you have found some funding for your business, the next time it gets easier. We look at that leverage aspect. So that's, I think, really important to keep in mind. And finally, of course, we at Business Link are very much available to talk strategy, whether it's financing strategy or anything else about your business operations. So this is how you can get a hold of me. My name, again, Mark Shields, and that's my email address. You're also welcome to phone me if you'd like to talk to me directly. We also have a Business Link representative right in your area. Her name is Maureen Easton. I don't have her contact directly here, but you can absolutely reach out to me and ask for her, or I might even make that referral just so you've got someone really close by. And then you can also, of course, reach out to our general line where you can call us at the 1-800 number or send us an email. And finally, please subscribe to our newsletter. Find out all about the other webinars and educational opportunities we have coming up, our blog, see client features, and all kinds of great stuff. So yeah, that's about it for our content here. If anyone remaining did have any questions, I'm more than happy to stick around and address anything, thoughts that might be on your mind.
Excellent. Thank you very much, Mark. Great information, very enlightening, very in-depth. I certainly learned a lot myself. Lots of good new information.
Good.
I will invite, if anyone, as Mark said, on the call has any questions, feel free to just enter them into the Q&A box there, or raise your hand if you prefer to speak verbally, and we'll allow you the opportunity to do so. If there are none, Mark, I certainly do have a couple I wouldn't mind throwing at you. I did actually have more, but as we went through, you addressed most of them. So great job, great information.
Sure, yeah, by all means.
One slide I was particularly intrigued by was at the start when you showed the various sources of funding and the frequency with which they're obtained. And the one that struck me as surprising was the grants portion. I know you mentioned comparatively it was quite a low source of startup funding in terms of financing. Do you think that's because of a lack of awareness of the grants that are out there, or is that a lack of grants available to meet the specific needs of the businesses that are getting up and running?
Yeah, I think it's the latter there. It's more that the amount of grants that we ever see coming through our purview for startup businesses is very few and far between. And I think it's really an element of that risk. The same reason that it's difficult to get a bank to want to loan you money and difficult to find investors for your business idea. I think we can probably appreciate to some extent the government doesn't want to be, seen to just be spending money on failing businesses, so to speak, right? To be kind of blunt about it. Although I have had clients who said, I've seen the government spend on worse things. So it's like, well, that may be the case. But I think that's really what it comes from, is that the risk perception is just still so high at that early stage. So granted, if we did that poll for businesses that had been in operation for 5 years, I think you'd see a big shift in how those bars show up there. But at that startup stage, yeah, it's just that I think it's that risk that really limits the grant opportunities for those businesses, those business ideas.
Sure. Yeah, makes total sense. Absolutely. That's the question I was going to ask, and it's maybe more suited for a different webinar, but I'm curious, just from a very general sense, and I know you did touch on it briefly. Are you finding as a result of COVID and some of the current economic realities that more and more people are reaching out to you for this type of information? Are you finding a higher interest in starting up a business and exploring the ways of financing it?
Yeah, that's a really good question. Just sort of a brief overview of what COVID-19 has sort of looked like from Business Link's lens. We of course, very unsurprisingly, had a big spike in people reaching out to us right as government restrictions set in, and panic was kind of the order of the day in many ways, business and then some. We did see that tail off, but has remained at somewhat elevated levels. And so we are still today getting calls for people asking what other supports can I find for my business for COVID-19 relief. A handful, I'd say, on a daily basis still coming in with that. But on the other hand, that willingness to start businesses, or the seeing opportunity to do so, didn't seem to diminish. We didn't see a drop in those types of calls. Now, with Business Link, we don't, partly because of the volume of businesses that we end up dealing with, we don't have a lot of strong ability to follow up, like how many businesses got launched of all those ones who reached out to us with ideas. But that we certainly can say without a doubt that seeing some opportunity is still present within the population, which is encouraging, I think.
Of course, absolutely, very much so. Excellent. Okay, coming up for 12:45, which is, I think, perfect timing to probably just look to wrap things up.
Sure.
Note that, as Mark mentioned, we will be sharing the slides on our website at innisfail.ca/business. We'll also have the recording up there. It's also at that same link that you can register for further upcoming webinars. Of course, we've got one next Wednesday, Startup Steps, Making Your Idea a Reality, and then the following Wednesday, June 2nd as well, Market Research for Success. So with that, Mark, thank you very much. Again, it's been fantastic. Thanks everyone for joining us on the call, and to the Chamber of Commerce again for supporting and partnering with us on this. And Mark, is there anything I missed there?
No, I don't think so. Yeah, just kind of reiterate, check out next week. So my colleague Maureen, I believe, will be delivering that presentation. You get to meet her and you'll connect with her as well. And it's the startup steps are lots of great stuff to learn there. So please do with him.
Excellent. Very much looking forward to it. I do just see there's one comment come in and just got some thanks to pass along to you there, Mark. So
good.
Excellent. Thanks again and take care, everyone.
Yeah, bye for now.
You. Bye.